All right, what is up, tycoons? What's up, traders? Super excited for today's video. I'm coming at you guys with another viewer request. Today's video, we're going to look at ticker symbol SWK. This is the Stanley Black & Decker stock, and this actually is a dividend stock. As you can see here, it pays a dividend yield, or it's got a dividend yield of about 4.31% at the time of this recording. And year to date, we can see that it's actually down about 2.55%. Meanwhile, things like the NASDAQ and tech stocks are performing very well to start off the year since January of 2023. So we're actually going to dive into this thing a little bit more. All right, we're going to go over the charts and go over the technical analysis, because if you missed the last video, you missed the head and shoulders pattern that predicted that we were going to have a pretty big move to the downside. So make sure to watch all the way through so that way you guys don't miss any of the key content in this video. And of course, none of this video is financial advice. I would never recommend or tell people to buy a stock or give out any type of financial advice on YouTube. So with that being said, we're going to go ahead and jump straight into it. We've got an $11.36 billion market cap here currently. It's got a PE ratio of about 70.24. Now, one of the reasons that I actually started making videos and covering SWK here recently is because we were approaching the pandemic lows, guys. Look at the prices that this stock was at in 2020, and then look at where it's been retesting here as of recently, and we're back into this demand zone from our pandemic lows. So that's one of the main reasons that I started covering this stock, is because if you missed the opportunity over here, and missed all of this run up, it's completely done a 180 and came all the way back down to its pandemic prices. Not many stocks have done that, and this could potentially be an opportunity, but of course there's going to be a lot of risks associated with it. And the reason being is because just because we're retesting some lows doesn't mean we can't break through those lows. And, there could potentially be a good reason that the stock is dropping so much. Now, of course, 2022 was an extremely tough and painful bear market for most people. And a lot of people saw a lot of their investments go terribly red. And SWK was not spared from that. Let's just put it that way. Okay. Now, one of the reasons in recent news why the stock is down is Stanley Black & Decker has announced that they're going to close Texas and South Carolina plants. And this has kind of affected the stock negatively. And the executives have spoken in recent months of the shrinking the company's footprint. Now, on our next slide here, what we're going to do is actually go into their financials from their latest earnings report. We'll take a look at the cash flow, balance sheet, and income statement. And if we start off here with the income statement, we can see that revenue on a year-over-year basis is up very slightly. Okay, it's pretty much just break even. It's up 0.12%. Meanwhile, operating expense is down 4%. The net income was negative $45 million. That's over a negative 100% year-over-year change. And the net profit margin was also about a negative 113% year-over-year change. Earnings per share is also down a lot, negative 0.10. And it's got an EBITDA here of negative 69% on a year-over-year change. Now, when it comes to their cash and short-term investments, that is up 176% in the past year. Meanwhile, total assets as a whole is down 11%, and total liabilities also down about 8%. The net income we went into earlier was negative 113% on a year-over-year change. The cash from operations is up 75%. Cash from investing is up 94%. Cash from financing down 132%, and the net change in cash was down about 12%, with the free cash flow up about 146%, all on a year-over-year change. So that was a quick dive into some of the financials. And if we take a look here, I just want to go over some of the technical analysis. And so if you notice, we have these series of yellow lines on here a lot. What these are the three most common and well-respected Fibonacci retracement levels. And the reason that we look at these and we pay attention to these is because they help identify trend continuation, because nothing moves in a straight line down or in a straight line up. Rather, you would get a move down, retracement, continuation of the trend, or you could get a move up, retracement, continuation of that trend. So the fibs will help you identify these trend continuations. For example, we have a swing high up here and a swing low down here. We have this big downside move. We retrace up near our 50% and 61.8% retracement levels. And then ultimately we continue that trend. And as you can see by the white line here on the chart, we've kept retracing and continuing that downtrend until we hit those pandemic prices and hit that pandemic demand zone here in green. We've started to consolidate, and it tried to start an uptrend and possibly potentially fill this gap up at $114 per share, which if you're not familiar with gaps, take a look at this candlestick and then this candlestick, and you see all of this open space right here. This is a gap. Now, gaps tend to fill about 90% of the time historically. The big question is, when are they going to fill? Not so much if they're going to fill. There is that 10% chance that they never fill, and that's always a possibility, but it's really important, in my opinion, to chart up these gaps, set some alerts near the gaps, so that way you can be alerted when a stock is potentially filling a gap up or potentially about to fill a gap down. So that's something that I'm paying attention to. It's got a really big gap up to $114, and it's got a really big gap up as well to about $137. If you take a look from this candlestick down here to this candlestick, you can see we still have that big gap in the chart. Now, what we're going to do is we're actually going to zoom in a little bit more so it's clearer for you guys. And we had a few signals and two possible structures that we were looking for. We had our major fib retracement levels here, but this time they were support, because in the last chart, you can see we had that downtrend, right? And so all the fib levels were resistance for looking to see if we were going to continue the downtrend. And ultimately, we did continue that downtrend. Then we consolidated and started an uptrend from $70 all the way up to about $95. So we wanted to see if we could continue that uptrend. And in order to do so, we needed to hold our major retracement levels of support here. And I said, if we break below these, we're going to be bearish, right? So we're bearish below $81. And most likely we were going to see this head and shoulders pattern play out. And, you know, we had a left shoulder here, a head, and a right shoulder. All right, ultimately, we broke our neckline on the head and shoulders. We broke through our major support levels, and we actually came down into our demand zone. Now, on top of the, chart patterns and the fibs, I also really like to use the MACD. Now, if you take a look here, the MACD can help you guys spot potential entries and exits. So an exit would be when this red line on the MACD crosses below the blue line. When you see that crossover happen, typically, that would be what's known as an exit signal. And you can see that that exit signal happened right over here at this period of time when the stock was around $90 per share, and it's dropped down to $74 here recently. Now, another thing that I really like to look at is the RSI. And I'll show you what my favorite thing to use it for. All right, if you take a look here, we have a high, and then we have a lower high right here on the RSI. Now, how does that reflect according to the stock? Well, the stock had a high right here and then actually created a higher high right here. So you can see the stock is actually in an uptrend making higher highs, while the RSI is in a downtrend making lower highs. This is a term known as bearish divergence, and it's an indicator you may see some type of bearish activity. And I pointed that out in my last video as well, that we were seeing a drop due to that bearish activity or that bearish divergence. Now, if you start combining some multiple strategies together, for instance, we combined two strategies together of bearish divergence. And if you take a look, very shortly afterwards is when we got that MACD sell signal. And ultimately, we saw the stock drop about $15 since that point in time after those two signals. So this is why I love technical analysis. It's really helpful for spotting potential movements and really just trying to understand, hey, maybe is there a strong likelihood something's going to pull back here? Maybe I don't want to buy into something right now. Now, actually, as a part of my 50K portfolio challenge, I did actually just sell some stocks and buy into SWK. Now, remember, this is not financial advice, and I wouldn't tell anyone to follow me or give out financial advice on YouTube. Rather, this is just, an update on the stock and, letting you guys know that I did add some shares in that 50K portfolio challenge. So if you guys want to see what other stocks are in there, what price that I got into on SWK, on Stanley Black & Decker, then go ahead and click this video right here, and you guys can see, my biggest losers that I had, what stocks that I cut out of that 50K portfolio, and which ones that I just added. So that's going to be it for today's video. Smash that like button and subscribe to the channel if you guys are new.